Welcome to the Wyoming Women's Business Center's 2021 webinar series. Today's presentation is 7 options to access money for small business. I'm Christine Langley with the Wyoming Women's Business Center, and I'll be your speaker today. You'll notice the Zoom webinar bar on the bottom of your screen, and I want to call attention to the chat and the questions panel. If you have any questions during the webinar today, I'd like you to use those to communicate with me. Immediately following this presentation, we're going to launch a survey. And so I ask you to just stay on the line for a couple extra minutes to complete that survey, because it does provide us, as well as our funding partners, with valuable information. So everybody on the call today is muted just to minimize background noise. So once again, if you have any questions during the presentation, just type them into that questions panel and I'll get to them at the end. So we're going to get started with some quick information about the Women's Business Center, and then we'll dive into our topic today. This is a 30-minute format, and so we appreciate everybody joining us on what might be your lunch hour. So this is being recorded. It's going to be available on our YouTube channel. Just go to youtube.com and search for Wyoming Women's Business Center. You can subscribe to our channel and check out all the other business education content that we've provided over the last several years. So for those of you not familiar with us, the WWBC is a nonprofit organization, and our mission is to enable and empower Wyoming entrepreneurs. Of course, we have a special emphasis on women. So we do our work through 3 distinct programs. The first is our business counseling and training program, which is always free. The second is our microloan program, and we can offer loans anywhere from as low as $500 up to $50,000. And this is specifically for businesses that have been denied from a traditional lending source. And then the third program is our Artist Development Center. And we run that in conjunction with our Works of Wyoming store located in downtown Laramie. But what I really want to get across to you is that what we do is we specialize in micro enterprises. So what's a micro enterprise? Well, it's a business that has less than 6 employees. The majority really are 1 or 2 person businesses. And these are businesses that we're able to launch for under $35,000. Businesses like yoga studios and hairstylists, in-home daycare providers, marketing consultants, cleaning services, right? These are examples of our clients. So I just want to take a quick poll to see who is on the line with us today. And if you could just answer this quick question, true or false: I currently own and operate a small business in Wyoming. True or false? You might be in the planning stages right now, or you might already be in business, or you may just be kind of testing the waters to see if this might be something you're interested in. Doesn't matter, just like to know who I've got on the line with me. All right, terrific, thanks. Looks like we've got a pretty solid mix. Terrific. All right, we're going to get started with some information, obviously about funding. I want to talk about a term that's used in economic development circles, and it's just really a business term that means finding money, right? So when you're trying to access funding, it just means finding money for your business idea or your business expansion. And this is probably the #1 question that everybody that works in economic development gets, including me, which is, how can I get money for my business? And what I find that often the truthful answer is not what most people want to hear, right? So much so that sometimes I find a business owner gets referred to lots of different organizations kind of in their search for money, because no one wants to be the one to give them the honest answer, right? Because it may not be what they want to hear. So I'm here today because I don't want to sugarcoat the truth. I really just want to educate business owners on the reality of funding. Because if you go into your business understanding the reality and what your real options are, then it's going to be a much faster path to success, in my opinion. And personally, it's a lot less frustrating. All right, so before I dive into the various options, I want to bust the #1 myth that I hear over and over again. And that's the myth that's on your screen. It goes something like this: I'm a woman-owned business, or I'm a minority-owned business. Isn't there free money or government grant money available for me to start my business? Or another thing I hear a lot is, my business is really going to help this community, and Wyoming needs businesses. So where can I apply for grant dollars to start my business so it's no money out of my own pocket? Now, I don't know where this myth comes from, but a lot of people seem to be under the impression that there's some free money out there for business owners, and all they have to do is just ask the right person and find it. So there may be some small grants available. And when I say small, I mean less than $2,000 to pay for some very specific products or items related to your business. But there really are no federal government grants available to fund 100% of the startup costs of your for-profit business. Grant dollars are typically reserved for nonprofit organizations, and securing grant dollars, even as a nonprofit, is really competitive. And so while some grant dollars can make sense for some businesses, remember that you're going to need to meet stringent requirements of that grant. So in conclusion, grant dollars are just not a pathway to establishing or growing the vast majority of for-profit businesses, especially micro enterprises. Okay, so now that we've busted that myth, let's talk about what your real options are for accessing money to either start or grow your existing business. First up, and really the most viable possibility for the vast majority of small business owners, is what we call bootstrapping. Now, what does that mean? Well, it means you use your own money from savings to fund your business. And this can look different depending on what your resources are. So you may have an actual savings account that has money that you can use for your business. Or you may take an extra job that pays you income each month, and you put that income towards your business. Sometimes entrepreneurs can borrow from their 401k. Now, before you do that, I encourage you to understand all the terms associated with paying back that loan. Yes, technically it's your money, but when it's sitting in a 401k, it means that you haven't paid taxes on it yet, which means if you borrow from that account, you're going to be required to pay it back within a certain period of time. And if you don't, then you're going to be charged the taxes on that amount of money that you borrowed, and probably an additional penalty. And of course, I never recommend people quit their day job until they have a clear path to profitability in their business that can pay them an income. So if this sounds hard or a little complicated, it's because it is. Business ownership can have really big rewards, and therefore the barrier to entry can be steep. Because let's face it, if this were easy, then everybody would do it. So starting any business is going to take an enormous amount of effort and commitment. But most importantly, I always like to explain that it requires risk. So I want you to take a moment, and I just want you to think about your own personal risk tolerance. So on a scale of 1 to 10, I just want you to answer this for yourself in your own head. Scale of 1 to 10, 10 being the highest. How comfortable are you with risk? And specifically, financial risk. Full disclosure, I'm about a 3, okay? 3 out of 10. All right, now you've thought about that for yourself. Now I want you to think about it for your family or your partner. Is it the same answer or is it different? In my case, I'd say my partner's about a 6. So he has a higher risk tolerance than me. Now, having a low tolerance for financial risk doesn't mean you can't be an entrepreneur. I have a very low tolerance, and I'm a serial entrepreneur, and I have 2 businesses right now. Now, that being said, I know myself, and I know that in order for me to tolerate the risk, I need to be reasonably assured that my business is going to be profitable. And that means I do a lot of planning and preparation, and I'm highly disciplined. I'm not that person that crosses my fingers and goes for it. Now, if you have a high tolerance of risk, some of the early decisions to risk your own money or capital may be easier for you. But your tolerance level should not eliminate the requirement of planning and preparation. Those should still be priorities. It just means you may not lose sleep over launching. And full disclosure, I've lost a lot of sleep over my businesses, and really most of that boils down to my risk tolerance. So here's the takeaway I want you to remember about our number one idea here of bootstrapping. If you aren't willing to invest your own money in your business, why would anyone else? In almost every case of identifying outside funding, there will be some requirement that you also contribute some of your own money. Other people want to know that you have skin in the game, meaning you are personally invested with your own dollars, not just your time and your dream. All right, next up is utilizing credit cards. So quick story, my husband and I started our first business back in November of 2000 by using our Citibank MasterCard, and it had an interest rate of around 18%. We purchased $7,000 worth of equipment to get started, and I kept my day job to cover our minimum expenses. It was scary and it was risky, but so is business ownership. So remember that credit cards give you a 30-day float where you don't pay interest. So in some cases, you may have the money to pay off the debt within that 30-day float. In our case, we paid it off in 90 days, and that required a lot of hustle and discipline. Another option is to look for low interest credit cards or utilize bank transfer cards to keep that interest rate down. Do yourself a favor and be sure you read the fine print and understand the credit card rules. If you need help, you can reach out to us at WWBC. We can provide some resources that help you navigate that credit card game. There's a tremendous amount of information online that can help you identify the best credit card options for your particular situation. All right, we've talked about the first two options, which are basically your own resources. So now let's move on to the next most viable options, and that's friends and family. Now, often when I ask clients if they have friends or family that could invest, I'm immediately told that that's not an option. And sometimes that's true. But sometimes it really comes down to pride and just not wanting to ask because you fear rejection. And really, you want to be seen by friends and family as doing it on your own. Well, I'm here to tell you from experience that being a business owner requires you to get your ego in check. You're going to get a lot of no's through your business. And the best place to identify money for your business idea is with the people that know and care about you the most, and frankly, believe in you the most. So I recommend you start with friends and family before you seek funding from other sources. But I also recommend that you prepare your ask just like you would if you were going to a bank. And that means having a well-developed business plan and financial projections. So this is also typically the part where clients tell me that they don't have time to write a business plan, or they don't know how to do financial projections, or they don't have a computer, or they don't know how to use Excel. And all those things may be true and completely legitimate. But it doesn't make the need for a business plan and financial projections any less real. So if you need help putting together a business plan, a real business plan, and what I mean by that is it actually explains how you're going to legitimately pull this off and be successful. It's not just an academic assignment. Then reach out to us at WWBC and we'll step you through that process. We even have a facilitated or a self-guided online program that includes a business plan builder. And we can counsel you through developing financial projections. Finally, if you're able to secure some funding from friends or family, it's really important that you have that transaction documented using a promissory note and a payment schedule. There's templates you can find online to help you draft a professional agreement. Depending on the dollar amount, it may even be worthwhile to consult with an attorney. Just because it's family doesn't mean they don't want their money back. There's a difference between a gift and a loan, and it's important that everyone understands the terms up front. Now, there's also a difference between a loan and an equity position. So if a family member offers you some money to fund your business and say they want to share in the profits, that's an equity position or an ownership position, and that's much different than a loan. If the terms start to become more complicated than a straight loan with an interest rate, then I recommend you consult an attorney that can help draft an operating agreement so the deal is crystal clear to all parties. Setting up your business correctly in the beginning is going to save you a tremendous amount of time, energy, and money in the future, and in some cases, heartbreak. Trust me, I had to learn the hard way that relationships can sour quickly when terms aren't clearly defined. All right, next up is crowdfunding. Now, this is an interesting tool for raising capital. Modern day crowdfunding actually started back in 1997 when a rock band sent out an email to their 1,000 person email list, letting them know that they were going to lose $60,000 if they went on tour. So the fans responded by saying they should raise the money. Fast forward to 2007 with the launch of Indiegogo, and that was followed by the 2009 launch of Kickstarter, and the rest is history. So there's three types of crowdfunding. The one most of us are really familiar with is the donation-based crowdfunding. And donation-based crowdfunding really doesn't make a lot of sense for small businesses that are trying to turn a profit, right? No one wants to donate to your profitability. So that leads us to reward-based crowdfunding and peer-to-peer lending. If you'd like information on reward-based crowdfunding, you can find a few webinars that we've hosted in the last year on our YouTube channel. And we even have a reward-based crowdfunding partnership with the local crowd. They're right here in Wyoming, and you can launch a campaign for free through the WWBC. So reach out to us if you're interested in something like that. And lastly, we have peer-to-peer lending. It's similar to getting money from friends and family, but in this case, you just don't know the person. It's a negotiated loan between two people, and it can be an option for funding. Again, having a solid business plan and financial projections is going to be important. Number 5 is angel investors. So let's start by just defining who an angel investor is. This is a high net worth individual, which typically means they have a net worth of over $1 million. And that money is in highly liquid assets, such as cash or cash equivalents. Now, most angel investors are looking to invest under $1 million, and they primarily invest in businesses that are local or regional. They like to share their knowledge and be involved with the business, sometimes in a mentoring role. And they're looking for an equity share, or they'll structure a loan. Angel investors are often associated with a group of investors that pool their money into a fund that lends together. So an example would be 10 different angel investors investing $200,000 each so that they can establish a fund that can ultimately invest $2 million into various businesses. And they make those decisions as a group. Now, certain funds are really dedicated to early stage startup companies, but most angel investors want to invest once a company is already showing revenue, right? They're already making money. And this is because angel investors are looking for a solid return on their money that they lend, and therefore they're going to prefer to invest in companies that are already showing promise. Most micro enterprises are not going to be valued at a level that interests an angel investor. So if you've ever watched Shark Tank on TV, this is an example of angel investing. The investment opportunity is typically under $200,000, and the sharks are really looking for favorable terms. All right, we talked about angels, so we have to talk about venture capital, also known as VC money. Now, VC money is similar to angel investing or angel money, but you can just basically add some zeros. These are bigger dollar amounts. And these people or funds are looking for larger investments, and they're more comfortable with risk because they're looking for major returns and a major equity position in the company. Again, micro enterprises don't really qualify as a prospect for VC money. And the reality is that less than 1% of all businesses annually that apply for VC money actually get funded. So it's fun to read about in Inc. magazine, but for most of us, it's not a viable option. Now, if your business idea is highly scalable and investable, then this may be an option for you. And I have had a couple of clients during my work in economic development in Wyoming that were able to attract venture capital, meaning it's possible. It's just not likely. All right, so I'm going to wrap up today on bank loans. Now, there's lots of options when it comes to bank loans, but just like all my other examples, besides bootstrapping and credit cards, they all require a strong business plan and financial projections. So please start with those documents before approaching any lenders, because they're just going to send you back to the drawing board and you'll need to get it to them regardless. So most of us have a bank that we use for our personal life, and that can certainly be a good place to start. You should understand that banks are really risk adverse. So they're going to often steer you towards a home equity line of credit if you're a homeowner, or they're going to ask for a personal guarantee or maybe collateral to secure that business loan. And so it's important that you understand what you're agreeing to before you sign anything. So if you need some help, reach out to us with questions, or be prepared with questions for your banker. Now, if a traditional bank denies your request, there may be a lending opportunity through the Women's Business Center microloan program. Again, all lenders, including us, are going to require business plan and financials, and that's where we typically start with clients. Now, some of you may have heard of SBA loans, and you may be a little confused on how those work. Well, here's a simple explanation. An SBA loan is a government small business loan that can help cover startup costs, expansions, real estate purchases, and more, just kind of depending on the loan program, because there's many. Now, this type of financing is issued by a private lender, like a bank or a credit union, but the loan itself is backed by the federal government. And because that loan is backed by the federal government, it lowers the risk for the lender, for the bank. So you can apply for an SBA loan through a lending institution like a bank or a credit union, because you can't go direct to SBA. They don't compete with the private sector, right? They support it. They're a government agency. So that lender will then apply to the SBA for a loan guarantee on your loan, which means if you default on that SBA loan for some reason, the government is going to pay that lender a guaranteed amount. So it reduces that lender's risk. Now, the SBA programs are going to require their lenders to collect an unconditional personal guarantee from everyone with at least 20% ownership in a company. And this guarantee puts you and your personal assets on the hook for payments if your business can't make them. So remember when we talked about having skin in the game? Well, this is an example of lenders wanting you to have your own personal assets on the line. They want some level of guarantee that you'll make good on that loan. All right, I'd be remiss if I didn't mention some special programs offered by Wyoming economic developers across the state. There may be opportunities in your local area for startup competitions that can offer prize money. There may be some small business grants through the Wyoming Business Council or a local economic development agency in your area. So be sure to reach out to your local chamber or a regional director at the Wyoming Business Council to really understand their programs. These options aren't going to fund your entire startup, but sometimes small amounts can really help you gain some momentum. All right, guys, this is your opportunity to ask some questions. So I want you to go ahead and type into the questions panel or the chat, and I'll kind of monitor those. I'll give you some time here to type while I go over some other information about the WWBC. So if you're interested in becoming a client, you can visit our website at wyomingwomen.org and click the Sign Up Now button. It's simple, it's an online application, it's always free. And once you do that, you'll gain access to special business education content. And you'll also have an opportunity to schedule a one-on-one business coaching session with our staff business counselors like me. Now, if you're interested in more 30-minute webinars like this one, you can find all our upcoming training on our website under the training tab. Here's a few coming up that you might be interested in checking out. Remember, even if you can't attend a live training, we always email a link to the recording for all registered attendees so you can watch it when it fits into your schedule. And I want to call close attention to this Dream Builder. The Dream Builder Planning Program is coming up on January 12th. It's an 8-week facilitated course. It'll walk you through building that business plan if you haven't done that already. And we'll be right there with you every step of the way. All right, we're made possible through several funding partnerships. And so our primary funding comes from the U.S. Small Business Administration, and then their grant dollars are actually matched by the Wyoming Business Council. And so, of course, we're thankful for all of their support, and we look forward to what we're going to be doing in 2022 now. And so keep those questions coming, guys. If you have any, just type them into that chat or the Q&A panel there. And quickly, I just want to remind you that the WWBC is a standalone 501c3 nonprofit. And what that means is that every donation made to our organization is a tax-deductible gift, and it goes directly to our mission of empowering Wyoming entrepreneurs, especially women, through our counseling, training, and microfinance programs. And I always like to remind people that every micro gift is important, just like every micro enterprise in a Wyoming community is important. Because I don't want to live in a town that doesn't have a coffee shop or a yoga studio or a daycare or a pet groomer, right? And that's why it's important to support economic developers like the WWBC. So if you feel like this webinar or some of our other education content has been valuable to you, then I encourage you to go to our website and consider a micro gift. You know, your $5 or $10 gift can make a difference in the programming that we can offer and the number of entrepreneurs that we can help. You don't have to be rich to start a business, and you don't have to be rich to engage in philanthropy that makes a difference in your local community and in your state. All right, guys, back to questions. Let's just see if we have any here real quick. I have a tendency to be thorough, so sometimes I don't get a ton of questions. Good, good, good. All right, again, if you're interested in bank financing and you need some help, kind of having somebody walk you through what those options are, become a client of the WWBC, and we have experts on hand that can help you with that. All right, everybody, thank you for attending today. Stay on the line for just an extra couple minutes and complete our survey. We read every single one. It really does help us develop our training going forward so that we meet your needs as business owners. Thanks again, everybody. Have a great holiday season. Bye-bye.